Welcome at the Ronel Talks Money show. And today we are going to talk about a topic that a lot of people have bad experiences with, or that people are sometimes dreading, but there's also a lot of good experiences, and also to understand what are the advantages and the benefits and the value a good financial planner or advisor can add to your personal financial situation. Now, the topic would obviously be financial planning, and we are very fortunate to have Lelane Bezuidenhout. She is the Chief Executive Officer of the Financial Planning Institute with us today, and she will inform us a little bit more about financial planning, financial advisors, and just tell you kind of what you need to know, what kind of benefits are there in having a financial planner, and if you do struggle, what are the options? So Lelane, thanks so much for joining us today.
It's only a pleasure, Ronel, and I must thank you for this opportunity. And kudos to you for your passion for the consumer out there and to help them to understand financial planning and if there's a difference between an advisor or a planner. So thank you for the opportunity, Ronel.
It's a big pleasure. And I just want to say to the viewers, remember, please subscribe to the channel. You can also see there's a link at the bottom where you can enter our monthly giveaway competition, where you can win one of my books, Financially Fit and Wealthy, financial online courses. So please go and enter the competition and also subscribe to the channel. But before we get into the discussion, Lelane, maybe you can just tell us a little bit more about yourself and also about the Financial Planning Institute and the role it plays.
All right, thank you very much, Ronel. I've been in the financial services sector for close to 25, 23 years. And I've got a very big passion for the financial sector, but also the financial planning profession. I've been at big companies, product providers, one of the big five for many years, where I specialized in complaints, but also compliance matters. And that's where my love relationship started with what we call a financial advisor and a financial planner. And I have the utmost respect for financial advisors and financial planners because it takes years of studying and experience to become the professional that we're going to talk about today. So I've been at a big insurer. I then moved to the Phase Ombudsman, where I investigated a lot of the property syndication matters. I'm not going to mention names. We're well aware who they are. And that opened my eyes to what the stumbling blocks are for some of the advisors and for some of the planners. And I'm a firm believer in stumbling blocks becomes stepping stones. So in my role at the Financial Planning Institute, I'm very fortunate to be part of a global network where we set standards for financial advice, but financial planning as well. So I'm part of the committee that's the Chief Executives Committee, which is a committee that consists out of CEOs like myself at institutions like the FPI, but worldwide. So we talk to Australia, Canada, UK, US, all the way in the East, Singapore, where we all come together and we look at what is best practice for financial planning. But let's talk a little bit more about the Financial Planning Institute of Southern Africa. Now, Ronel, yourself, and I'm going to hone in on you a little bit. You are a chartered accountant, which means you belong to a professional body like SAICA. No, the FPI is also a professional body like SAICA. So we are a South African Qualifications Authority professional body, or in short, a SAQA professional body. That's a mouthful. So what does that mean? That means that we are a professional body where we look after a group of professionals who we are accountable to make sure that they're competent and that there's a framework to make sure they've got the necessary skills and the competencies to work with public and consumers out on the street. You are a consumer, I'm a consumer. But I'm also a certified financial planner myself, which really helps because I understand what the standards should look like. So FPI is about 40 years old now, so we've been around for some time. And we started out as ILPA, and that's the Institute of Life and Pension Advisors in the 80s. But the financial services sector has changed quite a lot. Back in the 80s, we didn't have unit trust. We didn't have linked investment services providers. There was a lot of things in the investment world that we didn't have. You couldn't really invest offshore. A lot of the world looked different in the 80s. Now, in the late 90s, we had quite a drastic change within South Africa. Our monetary policies and fiscal policies changed a lot. But so did the investment world, for instance. So it was no longer just life and pensions, but investment as well. So in 2001, it's no surprise that the FPI changed its name from ILPA to the Financial Planning Institute of Southern Africa. So we're not just a SAQA recognized professional body, we are also a recognized controlling body for SARS, the South African Revenue Services. So a lot of our financial planners are tax practitioners as well. And what a recognized controlling body does of SARS is we make sure that those tax practitioners that are planners as well remains to be competent tax practitioners via CPD. But then we are also an international affiliate of the Financial Planning Standards Board. South Africa, within South Africa, the FPI is the only license holder of the Certified Financial Planner Professional mark, which is a US trademark belonging to the Financial Services Board, which is why we are quite strict on the correct use of the designation. And then what the FPI does, if you look at our name, it says the professional standard. That's what we do. We set standards for financial advice, but also for financial planning. But what a lot of people don't know, what we also do, is to represent our profession at National Treasury, where we look at some of the laws that's coming in, like the conduct of COFI, of financial institutions at this point in time, that went out for public comment. We also work very close with the Financial Sector Conduct Authority that regulates financial advisors who's licensed under the FACE Act. We worked very close with NCETA, which is training and education authorities, but we also work because a professional body is also not just regulating their members, they also work from an education point of view in developing standards. So professional body is a non-profit, but we all do it for the passion and the love of the profession, Ronel. So that's in a short nutshell, the FPI.
Okay, thanks so much for sharing. I just want to say, I think there's sometimes a bit of confusion because you hear about financial planners, financial advisors, brokers. What are the differences and what should people know about all these different, if I can call it, concepts almost?
Yeah. It's perfectly understandable that there's confusion, but if we put in simple terms, let's look at the medical profession. You get a doctor, you get a brain surgeon, you get a pharmacist, you have a nurse, everybody with different roles and different competencies. Now let's pull that same concept to the financial services sector, and I'm really trying to keep it simple for the benefit of our listener in terms of understanding these terms. So it's the same in the financial services sector. You have different terms as well. So let's talk about a broker. What is a broker? Is it the same as a financial planner? The answer is no. A broker is somebody who would specialize most of the times in short-term insurance and maybe medical aid, where they would look at personal insurance and maybe commercial insurance and sometimes your medical aid as well. So that is a broker. Then you have a financial advisor. And then what is the difference between a financial planner and a financial advisor? That's where the most confusion comes in. Now, a financial planner can be a financial advisor as well. Now, how's that possible? So let's talk a little bit about that. So a financial advisor is somebody who would give product advice. So that individual could be independent. In other words, you don't belong, you're not a representative or an agent of the blue company, the red company, or the green company. Which other colors are there? So you're not a representative or agent of just that financial services provider. You're independent. You can represent because you have what they call a broker code with these financial services providers. Then you get somebody who is completely tied and belongs to just one financial services provider. So somebody who's a financial advisor most of the times provides product advice. That is somebody who you would approach to say, you know what, I just bought a home, there's a bond, but the bank wants me to have life cover so that there's some form of security. And that's when you normally cede your policy to the bank to make sure that if something happens, that there's life cover that can actually cover the bond for you. That's what we call a single need. And for something like that, you would need life cover. You would need to have to go for underwriting and for that life cover policy. That is a single need, that's product advice, and that's where a financial advisor can help you. But again, one should always be aware of what the consumer's needs are. So do you need a broker, or do you need a financial advisor where you just need some product advice? Or do you need a certified financial planner who can give you professional advice? Now, a certified financial planner, the reason why I said you can be both, is a certified financial planner gives professional advice, but they do sometimes also give product advice because they may have a coach with some of the financial services providers, because they would make a recommendation, but they would also implement that recommendation for you depending on your service level agreement that you have with the certified financial planner. So what is professional advice then? And what is the difference? Well, professional advice is where you don't necessarily recommend a financial product. I might sit with you today and say, Ronel, you look a bit stressed. Why? You know, but I know we're back in alert level 3. And then in confidence, you would say to me, oh, Lelane, you know, we've got a bit of a liquidity crisis inside our own household. You know, the cash flow is not what it should be. And then a professional advice is where I then sit with you because you've appointed me as your financial planner. And I would say, Ronel, let's just quickly look at your income, your expenses, your assets, your liabilities. It's almost like a personal income statement. You know, we do a personal income statement for you, so that we can see where you are, and then we also do a cash flow statement for you. So instead of working with you as a business, we work with you as an individual, and that's where the professional advice comes in. And I would say to you, sure, you know what, we're looking at your credit card. Don't you think you should pull the handbrake up a bit? You know, don't use your credit card for certain things, you know, but rather eat, order less from Uber, you know, but just buy healthy foods. And, you know, it's all about mentoring and coaching, which is your passion as well, which I know. So this is where I would sit with you, and I, as the certified financial planner, becomes your mentor from a financial point of view, but I also coach you in terms of what is a healthy habits. So that's the difference. A financial planner can give professional advice, but also product advice. A financial advisor gives product advice, and a broker is somebody who does broking for maybe a short-term insurance company. And is the one more important than the other one? No, it all depends on what the consumer's need are. They all studied to be what they are today, just like a pharmacist studied to be what he or she wants to be. A nurse studies, and so does a doctor. So I don't want to say that the one is worse than the other one. They're all good. It depends on what the need of the client is.
Okay, no,
I hope that clarifies it a bit.
No, I think that actually helps a lot to really understand that, because now you can, if you understand those differences, you know, kind of, if I need this specific kind of advice, I go to this kind of person, and that can really help a lot in terms of making decisions who you are dealing with for whatever reason.
That's it. Yeah, and a financial planner also deals with highly complicated, complex matters like farms, you know, farms that's in a trust, and trusts and estate planning. You do get financial advisors that deals with that as well, but it sits more in the realm of a certified financial planner.
Okay. And then what would the advantages be for the public out there to have a financial planner?
There's a lot of advantages for somebody to have access to a certified financial planner. So a financial planner, first and foremost, will sit with you, and they would look at what is your goals, what's your dreams. And it's literally a consultation process where they listen to you and they help you set your goals. Think of a certified financial planner as your personal trainer. You look a certain way today, in a few months' time, you want to look another certain way, but you need to change your diet, you need to change your exercise, exercise routine, maybe get a bit more sleep, and so forth. So a certified financial planner would come in and then look at your overall net worth. Where do you want to be? They would then also quickly, we call that a snapshot. And then they'll come in and look at your overall daily spending, financial management, risk management, estate planning, quite a few areas that they would look at. But once they've put that plan in place for you, and if you've agreed on it, and that plan is based on your goals, your dreams, your risk appetite. I mean, not everybody can go like Schumacher around, Formula One, 390 kilometers an hour. Sometimes you just want Mr. Bean's little mini. That's your risk appetite. And the financial planner would always respect that and give you advice in accordance with who you are. So a financial planner helps you to set your goals, but a financial planner also motivates you to stick to your goals. And whenever the market is maybe a bit up and down like it is at the moment, a financial planner is there to motivate you not to be scared, don't fear, but this is where we are, hang tight, and they motivate you. So there's a lot of benefits of working with a financial planner. I mean, a financial planner is also, like I said, committed to you as a person, and they will always put the client first. We talk about conflicts of interest. A financial planner, that just doesn't exist, because one of the principles that a financial planner adheres to is not just objectivity and fairness, but always to put the client first. So there's major benefit in working with a financial planner.
Well, no, I believe because of financial planner, it's not only about like in product advice as such, then you definitely there where a lot of people have that experience of they just want to sell me some kind of policy and I don't want a policy. This is totally different because they are not kind of, just running to sell you a policy. It's much more, and people should understand that difference as well in terms of how they can benefit you overall, your financial wellness.
Absolutely. I mean, a financial planner is a problem solver, and they resolve problems by literally trying to first and foremost understand you, understand what you like, what you don't like, but also what's good and what's not good for you. So they would always try and understand you as a person first, and then look where it is you want to be. And they've got a very good skills in terms of working with people, human beings, in terms of emotional intelligence, and making sure that they actually have communication skills to work with you. So they're really problem solvers who listen to what you have. You're not going to pick up the phone and say to your financial planner, this is the problem I have. Oh, you know what? I've got just a product that will resolve that for you. It may be a product in the end of the day that will resolve your problem. You need life cover, for instance, but if you've got a problem, your financial planner is always there to listen. And the beauty is I have a very good certified financial planner who's my planner. And I've referred him to my brother, who was unfortunately retrenched during these times. And because I trust him with my life, that's literally where I am with my financial planner. I could, without a shadow of a doubt, recommend my planner to my brother to help him with his packages and just how to survive these volatile times.
Yes, that is so important. And then
yes, you must trust him.
Absolutely. Yeah. And what are those qualities that you will typically find in a good financial planner?
All right. So a good financial planner, you would first and foremost, just the way that they deal with you and the way that they speak to you, you can immediately see that this is a person of high competency. So they've studied for literally quite a few years to actually get the knowledge that they need. And they have years of experience to have the abilities and skills that they also need to be a financial planner. A good financial planner will also be somebody who's relevant and who gets with the times. So you won't have somebody who talks about something that happened 2 years ago and then you go like, oh, this oak doesn't really know what's going on in the world. Even you as a consumer knew that you can't write checks out anymore. Silly example, but it's a good financial planner is somebody whose knowledge is always up to date. They know what's going on in the markets, they know what's going on in the world, they know what's going on within South Africa's monetary and fiscal policies. In other words, they know the economy and they know what's going on. Then also a good quality quality of a financial planner is somebody who's got high levels of emotional intelligence. It's good to have a good IQ, but it's also good to have a good EQ.
Mm.
You need to have that emotional intelligence and patience to work with somebody, because your clients, not everybody's going to be a client who's somebody who's just, there's no problems. Children are perfect, marriage is perfect, dogs bark 1 2 3 completely, everything is just perfect. I don't think that exists, quite frankly. So you must have the ability to listen to your client, but with empathy as well. You can't say, listen, you know what, thanks, I know you've got a lot of problems, but you know what, I've got another meeting at 10 o'clock. Make enough time to actually speak to your client. And then also somebody who's always puts the client first. I've mentioned that, not their own interest before yours, but also a problem solver with good analytical skills, great listening skills, good communicator. You should not battle to actually understand your financial planner. But for me personally, I've got a pet hate with somebody who goes into legal jargon, because I would look at you and go like, I may understand what you're saying, but my spouse, who's not in the same industry I am in, doesn't understand a word that you're saying. So it's
Mm.
almost like the financial planner would say something and I would then translate it to my spouse to say, what he's actually saying is breathe. You don't have to use the biological terms to breathe.
Mm.
So use plain language. That's also a sign of a very good financial planner, because you don't need to use jargon to impress. It's just your behavior that impresses already.
Mm.
High levels of integrity is very important. High levels of diligence, objectivity. Somebody who understands the importance of confidentiality. That's quite an important one. So is your data and your information safe for that person? But also somebody who shows commitment not just to you as a client, but also to the financial planning profession. How involved is that person maybe in his or her own profession, like yourself? I mean, you're involved in coaching other people that's not necessarily your clients. Very important, a good financial planner, especially a certified financial planner, is in good standing with his or her professional body. So what does good standing mean, and how can you find out? I think we'll cover that question a bit later, but I am going to tell you what you can do is, if you have a plan and you're not sure if this is somebody in good standing, and good standing means I'm still a good member of the FBI. I've completed all my continuous professional development training hours. In other words, my knowledge is up to date. And the most important one is there's no disciplinaries or anything bad against my name at the FBI, because our planners every year has to give us a declaration to say, I'm still okay. I didn't, in the meanwhile, sell a Ponzi scheme or become a crooked okie, So they sign that every day, and that's a declaration. And if you lie under that declaration, there is big ramifications for somebody who
Mm.
does that. So that is the qualities of a good financial planner. You'll just also feel the qualities of a good financial planner, because they really have that warmth that
Mm.
comes with them. They're not ice cold. They're somebody who literally sits down and say, right, Ronel, kom ons praat.
Mm.
So that's the qualities of a financial planner.
Okay, now that is really
Yeah.
good to know. And then, if you now, as a client, you have maybe quite a big portfolio and you have your investments, you have your insurance policies, you have properties, you have businesses, and whatever else. And now you ask, okay, so in terms of my whole portfolio, can my financial planner assist me with everything, or is there limitations? I have shares as well, and so maybe you should just explain to us, in terms of the scope of a financial planner, what can they look at overall, and are there any kind of exclusions or limitations that they cannot give you advice on, really?
Sure. It always, the question that you ask, it always takes me back to a court case, Absa versus Durr. And I mean, that's a well publicized case, which is why I don't mind mentioning it. I mean, it's in your financial planning handbook. It's also a financial planner should always know his or her limitations. So the moment that you understand your limitations, you should say to your client, I am not a specialist in medical aids, but I will refer you to somebody who is. So
Mm.
that's also a mark of a very good financial planner, is to know where your limitations actually are. But let's talk about the broad spectrum that a financial planner actually can look at. So first and foremost, a financial planner can look at your individual financial planning, but they can also look at your business and your tax planning. All depends on whether they may be a tax practitioner. So in the field of financial management, a financial planner can help you there with budgeting, cash flow issues that you may have, ratios in your business to understand your liquidity ratios. Let's just look at your business. How sound is your business? That's where a financial planner would clearly know where is the line between you need an accountant versus a financial planner who can help you to make better financial decisions that regards, with regards to your business. So financial management. Then they look at asset planning, which is investment planning. So all the way from your portfolio of shares to listed property, unlisted property. You have policies. You maybe have a policy, an endowment policy, or you have other investments at a LISP platform, unit trusts, and they would look at your full portfolio. And what's important there is they would make sure that your full portfolio is balanced in accordance with your risk profile and your risk appetite. It doesn't help you having extreme volatile investments when you actually, that example I used about going around the Formula One track and you can actually just handle Mr. Bean speed. But if you cannot tolerate that amount of risk, well, then maybe you shouldn't be in the investments that you are in. So that is also what a good financial planner does, is they would help you rebalance your portfolios when it needs to be rebalanced in terms of your risk profile. But they will also explain to you the difference between a bear market, at what to do in a bear market, what to do in a bull market, and when not to run and when to run. You never have to run, because if you run out of the markets, you turn your paper loss into a real loss. So that's where your planner would help you. They would then look at risk planning as well, not just for yourself, but also for your business. Many a times I was dealing with my son. I sat with him outside on Saturday morning, and he's got the director battles with succession planning. He doesn't know what's going to happen to his business. I said, well, you have to talk to him. Maybe he's willing to share or sell some of his shares. That's something you can have a look at. And then you put in place what we call a buy and sell agreement to make sure that there is succession within a business. So that is something that, especially in these times, I mean, COVID hits people very hard when you really don't expect it. So make sure that there's a succession plan in your business, number one, from a risk management point of view, but then individual life as well. So do you have enough life cover to cover everything that you need to pay to all your beneficiaries should you pass away today? Do you have enough liquidity in your estate to cover the taxes and everything that you need to pay when you are no longer here? Something as simple as funeral cover, do you have it? So from a risk point of view, funeral cover, short-term insurance, do you understand it correctly? Your medical aid, do you understand your medical aid? Life cover, disability cover, impairment, all those covers. So it's literally risk that you have. What a financial planner would also do, let's say I'm a financial planner and I specialize in investments and I'm not that good in short term. You do get, and I'm using an example, you may have a financial planner who has a license for all the investment categories and all the medical aid and let's say all your long term, but they don't have a license category for short term because that's not what they specialize in. That is when a financial planner would rely on a financial advisor who specializes in personal or commercial insurance, and he would refer you to that person. But before that planner refers you to a financial advisor who can help you in those specialized fields, the planner, him or herself, will do a due diligence first to say, this is a person that I would have used myself. And that is the accountability and responsibility of a planner. You have to make sure if you refer your client to another specialist, like an advisor in commercial, make sure that you've done your due diligence on that person. Then they do, we've spoken about risk, tax planning. They help you with tax planning as well. Understanding your investments, what is exclusions, what is deductions in terms of your income tax. And if they're a tax practitioner, they help you again with that as well. They help you understand the consequences of capital gains tax, for instance, estate duty, and that's what they do. They just help you with taxation within your full portfolio as well. And then I would say, you know what, we haven't really optimized your tax position. Let's have a look. If again the planner is not a specialist in tax, he or she will refer you to a specialist. Then a very important other field that they specialize in, or that we specialize in, because certified financial planner, this is what we do, is retirement planning. So they would look at your portfolio before retirement, and then they would look at what would it look like at retirement, but also after retirement. So we get what we call mortality and morbidity tables. That is the rate at which people get disabled and the rate at which they die. And that's what a financial planner uses, is to look at, Lelane, you are now 45. Yes, I am. So we would look at 45, oops, 45. And you know what, you want to retire 20 years from now. How much do you still need to save in the 20 years from now to actually get your retirement goal, to make sure that you have income that lasts you? Because the mortality table says you're going to live at least until you're 100 years old. So do I have enough income for another 35 years after I've retired? That is the importance of retirement planning. They call it the time value of money calculation, where they look at where you are, where you should be, and how long that income is going to last, and what level do you want to actually live at, your standard of living when you retire. And then the last one, the field that we specialize in as well, also a very important one, especially during these times, estate planning. So from an estate point of view, it's very important taxation as well. How are you married? And we're not necessarily, it's not necessarily happily married, but in terms of matrimonial, is it in community of property? And that has a big impact on financial planning. There's not a lot of people that knows that if you're married in a community of property, your spouse has to sign certain documents with you, especially if it impacts on the joint estate. Making the estate bigger, making it smaller, your spouse has to sign. And that's the same with estate planning. You have to understand what the impact of the matrimonial regime is on estate planning. And then, do you have a valid will in place? There's nothing more heartbreaking than somebody who thought they had a will in place. You never told anybody in the family where to find the will, or there is a will, but it was never executed in the correct way that it should have been done. And then they say, it's not a valid will. You unfortunately now have to deal with the master or with one of the magistrates' courts in your district, depending on how big your estate is. And you know what? It creates havoc. Please, 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 everybody, make sure you've got a valid will for the sake of the ones that you're leaving behind, and that everybody knows what's going to happen should you pass away. And I know these are the things we really don't want to talk about. I mean, the other day I spoke to somebody about a living will, and they didn't know what a living will actually is. Now, that is a will that if you maybe go into a coma, and you don't want to stay in a coma for 5 years or whatever the case may be, you and your living will then state, you know what, switch the machines off after a few months. And I know these are the things, Ronel, we don't want to talk about, but that helps your family. It really helps your family. So I've got that in place. And then, are you going to donate your organs or not? Do you want to be cremated or put 6 foot down? What is your wishes? That all of it could go into your will and your living will. So make sure that you revise that. And that whole spectrum of what I've just spoke about fits within the code of ethics that we have at the FPI. So everything you do in working with a consumer in these specialized fields, whether it's individual or for your business, must balance itself and find itself within the framework of the FPI's code of ethics. And we have very clear practice standards. Like you have accounting standards, there's practice standards for financial planning. So your planner would, within the framework, and a lot of people think, it's staccato, it's tick 1, tick 2, tick 3. No, the practice standards is a framework within which the financial planner then actually operates in providing financial advice to you.
Okay,
That's
thank
a
you.
mouthful.
It is, absolutely. But thanks for clarifying that, because now people would know kind of what kind of things can I ask my planner about. So thank you for that. But then people would, if they need a planner or a product or something from a specific company, that's quite easy because they can go to that company. But a lot of people have a need to talk to an independent planner who can really help you kind of like across the board in terms, and they are not kind of biased in terms of which company's product they will basically prescribe. So, but where do you go if you want to talk to an independent financial planner? Or where do you find them?
They're everywhere. But exactly, where do you find the good ones? So first and foremost, you have to make sure that whether it is an independent financial planner or advisor, or whether it is a tied one, again, it depends on what the consumer wants. If you want a certain product, well, and you need it in a hurry, you can go to a tied person. I think the most important, because there's always this debate between the independent and the tied, who's the better one. There's no such thing in terms of who's the better one. If you are a certified financial planner, you are a CFP professional, or you are a financial services advisor, which is one of our other professional designations, or you are a registered financial practitioner, which is also one of the FPI's other professional designations. The RFP, which is the practitioner I spoke about, specializes in financial advice, and the financial services agent also then specializes in financial advice. So that's the FPI's financial advice designations. And then the CFP designation is the only designation that we have for financial planning. So where do you find a good certified financial planner that is independent? Well, you can visit www.fpi.co.za, or you can visit www.letsplan.co.za. And there you would find access to our approved FPI professional practices who are independent, but there are professional practices who would then sit with you on a one-on-one basis. Now, there's a lot of practices like that as well. They're not necessarily FPI approved practices, but you do have a lot of independent practices that's not tied to a bigger financial services provider. Now, how do you know whether they're tied or not? You can, as I said, visit www.letsplan.co.za to get the contact details of that individual. And because what you can do is, let's say Lelane Bezuidenhout, and I've chosen to make my details visible on the FPI's website. You can put in my name. If you go to our website, right on the top it says find a planner. If you click there, you put your name, Lelane Bezuidenhout, and it pops up my details to say, yes, I'm a member of the FPI, and these are the fields that I actually specialize in. And from there, you can pick up whether somebody is independent or not. But also a very important step that you have to do as a consumer, you have to log on to www.fsca, which is the Financial Services Sector Authority. They are the regulator that regulates advisors. Now, if you're not licensed with them under the FACE Act, you will clearly see it there. And you will clearly then also see if somebody is maybe debarred. So what on earth does debarment means? That is when somebody they did something wrong in terms of the fit and proper requirements that sits at the regulator, which is the conduct authority. So one of the fit and I'm only going to hone into one of the fit and proper requirements because there's quite a lot. That advisor or planner may have fallen short of the integrity and honesty principle, and there would have been a whole investigation, and that person would have been debarred. And as you put in that person's detail, it would come up and say, this person is debarred. So and I think the one thing that we have to bear in mind, there is an onus on the consumer to also take some due diligence from your side. You must go and look whether the person, if he says to you, I can jump 900 kilometers up with just a single shot. Sure, that sometimes sounds a bit unrealistic. So how am I going to verify it? So verify your information by going to the FSCA's website. Verify it with going to our website. And if you can't find that person on our website, that person is most probably not a member of the FPI. But it doesn't mean you can't deal with the advisor if he or she is not a member of us, as long as the advisor is licensed with the FSCA. Because if they're not licensed, you're really heading for trouble, and you're dealing with somebody who's a fly-by-night who may not have your interest at heart.
Yeah, and I know with all of these scams happening, I think that is critical for people to go and do those checks. Just don't trust kind of every person and go do that checks. And then if you are not happy with your planner for whatever reason, or for the advice given, what are the options available?
All right, so there's a lot of options available, and the reason why we have options available is you go into a contractual relationship with your advisor, or your financial planner, which means there will always be remedies available to you because there is a contract that came into existence. And from a financial advisor and financial planner point of view, you need to have a service level agreement in place. And the moment that either party does not deliver on the service level agreement, there's a remedy that they have against each other. So the financial advisor does have a remedy against consumers as well, because not all consumers, I must unfortunately be honest, you do get consumers that's not, the
Mm.
ones that's got the right heart at mind.
Mm.
But then also the consumer does have a remedy if the financial planner or advisor does something wrong. So your first thing that you must do, so let's say you're now in your first meeting with the financial advisor or financial planner, they are licensed with the FSA as well. So they give what they call a disclosure letter. And in that disclosure letter, it's in the name. They will disclose to you, I'm Lelane, I work for Liberty Life, or I work for Lelane Bezuidenhout Independent Financial Planners. It's all in the name again. And then in that disclosure letter, I will disclose to you what it is that I can do and what I can't do. And so that's the very first thing that you have to go and look. But in that very same disclosure letter, it's legislation that you have to put in that disclosure letter. Where is your complaints manual? Now, most of the time, you will find the complaints manual on the financial services provider's website or your independent financial advisor's website. But they will have a link in that letter to say, should you have a complaint, this is what you do. Now, your first step is always to go to the person. I mean, if I've got a problem with you, Ronel, you would not like me, and I'm referring to you in your capacity as a chartered accountant. It's not fair or humane to say, you know what, I'm not going to tell you that I've got a problem. I'm just going to run to SICA and tell them, that's not fair. And that's not how you resolve conflict. I go to you and say, Ronel, I think you messed up a bit here, and this is how it financially impacted on me. What we then do is we look and say, oh, you know what, I see what I did wrong. Okay, let's see how we can fix it. Or no. This is not what went wrong. You maybe misunderstood. This is what actually happened. Oh, I see. Thank you for clarifying it. So your first step would always be to go to the financial advisor and in writing, give your complaint to them. If the complaint is not resolved to your satisfaction, only at that point in time can you go to the ombudsman. And I'll tell you why. The ombudsman, within their rules, any ombudsman, the long-term insurance ombudsman, the short-term insurance ombudsman, or the phase ombudsman. Phase ombudsman looks after instances where there was a financial service, which is advice or intermediary services. So let's say something went wrong with the advice. The first thing the ombudsman will ask you is to say, Ronel, did you try to resolve the matter with Lelane first? No, I didn't. I came to you straight. The ombudsman's going to say, okay, you know what? Go to her first and see if you can resolve it, then only come back to us. Because what the ombudsman will then ask for is your complaint and the response to see, was the complaint resolved, and you're just maybe trying to get more out of it by going to the ombudsman, or you know what, sure, this was not resolved, the financial planner, you in trouble because you actually messed up. So you have to face ombudsman, but all of that details will be in a disclosure letter or on your financial planner's website, or the independent financial planner practice. That details must be legislation, must be available to you. You shouldn't be looking for it. But now let's say you're a member of the FPI. You can write to the FPI to say, you know what, one of your members, Lelane Bezuidenhout, she's a certified financial planner. This is what happened, and this is what it caused me and my family. You know what, we now have a massive family fight because there's a problem between the will and the trust, and everybody's fighting over the farm. And just because the financial planner actually didn't understand how it really worked. But very important, when you do write and provide a complaint to the FPI, it needs to go to legal@fpi.co.za. But it's in the form of an affidavit, which we will provide you with. And it's important to understand that you may or may not come in as a witness in that case as well, because that's how we resolve it. So yes, you do have recourse. You can go to the financial planner themselves. They always have complaints departments. And if that doesn't work out for you, you always have the ombudsman schemes, which you can approach, or you can come to the FPI if that person is a member of the FPI.
And I think what is important with this as well is that there's no point in only complaining about somebody, but you never kind of like can take it up with that person and say, listen,
Yeah.
I'm not happy with this, I'm not happy with the service, because if you are
Yeah.
not going to try and resolve it, then
Yeah.
it's never going to change.
Yeah.
So rather than
Absolutely.
just kind of complaining, and that person probably don't even know that you are not happy with the service or with whatever kind of advice they've given, rather take it up and also kind of like can help
Maybe a
them to
misunderstanding.
improve their
Mm.
service if it is something that they've done wrong on their side.
Yeah. It's
Mm.
it's it's like the consumer needs to think, if this was my business, would I want the clients that supports my business to go to Media 24
Mm.
directly without even talking to me, or would I want the client to come to me and say, you know what, I bought this from you, but you know when I opened it, there's something wrong with it. You know what, I would rather approach you directly, and you can
Mm.
resolve it right there and say, oh, you know, gata patata, I can see what went wrong. Let's fix it for you. And sometimes you would go like, oh, I actually misunderstood. I forgot that there's a little button. I should have switched it on. You know, sometimes the resolution or the solution is that simple.
Mm.
Yeah. So complaints management is just following your steps that you need to have. Approach the
Mm.
person. If the person, it's almost like a biblical advice on how to resolve conflict, because this is conflict resolution. You go to the person. You only go and fetch witnesses once you couldn't resolve it with that person
Mm.
directly. It's the
Mm.
same principle.
Okay.
Yeah.
And then, Lelane, there's always this huge debate about the remuneration structure of a financial
Yeah.
planner or advisor in
Mm,
terms of earning commission versus earning
mm.
fees. And you should maybe just take us through that. Where are you guys with that now?
Yeah.
What should people know about this?
All right. First and foremost, we need to understand it. So the simplest way to sometimes to start with is just look at definitions. So what is a definition of commission versus what is a definition of fees? And are they different? The answer is yes, they are definitely different. Um, is it regulated? The answer is yes, it's regulated. So previously fees were not, but it's very important to understand that there was quite an important change in face regulations now recently in December. So let's talk about commissions. So commission is remuneration that a product provider would pay you, Ronel, for selling a retirement annuity, and that falls within your regulatory limits in terms of what you can pay as commission, because that's regulated by the long term, the short term act as well, and then your general code of conduct also talks about that. Now, for the financial advisors and financial planners that is listening to this today, they need to know that the general code of conduct was changed in December, and more specifically, Section 3, capital A. And I apologize for going into the detail, but you know, reading that whole code and trying to find it, it's easy. Look for 3, capital A. So what has changed? We went through a whole process which the UK went through a few years ago, which is RDR, Retail Distribution Review. It's exactly what it is. The Financial Services Conduct Authority, is looking at how do we distribute our products, which is retail distribution review. Let's look at it again. And some of the problems that came out is commission, where you would have behavior where, and this is what gave commission a bad name in the industry. You would have somebody who've received commission on a life cover policy, and then 2 years later, when there's no more commission clawback, unfortunately, the bad behavior then was to approach somebody to say, you know what, this is now such an old-fashioned product. Let's just replace it for you. There may not be a need to replace that policy, but there's a conflict of interest, because now I know after 2 years, there's a new policy, I get one, I get new commission. So that was unfortunately one of the problems in the industry. And that's why I'm so thankful for the whole RDR process that South Africa went through as well. And from the RDR document, there's about 55 proposals, if I remember correctly. And one of those proposals, for instance, was to look at replacements. When is commission paid? Is it paid? And so forth. So that is regulated regulated in a lot more clarity and detail now. So what is new? What was added? So commission is regulated. Fees previously wasn't mentioned in regulations. So it's important to know that the General Code of Conduct was changed the 26th of December 2020, which is literally a few days ago, to bring in fees, because fees is not mentioned in the Long-Term Insurance Act or the Long-Term Insurance Act. So now it's in to say that a financial advisor can charge financial fees if there's no commission. So there's certain fees that you can then charge, but it also goes as far to say that, and it's regulated now to say you cannot charge for the same thing twice. So if the fee and the commission covers the same thing, you're not allowed to do that. But if the commission pays commission because you've sold a product, but the fee that I charge is for something completely different, I am allowed to charge a fee and I can take a commission. But you cannot take commission and charge a fee for what I've done there. So that is now regulated. The amount of fees is not regulated, but what it does say is it must be fair. It must represent the service that I'm delivering. So if I say to you, oh, Ronel, it's going to cost you 5,000 Rand for me to change your address. You're going to go, what? 5,000 Rand to change my address? You can go into the self-service portal and change the address yourself and just use a little bit of data that you've used. So just always have a look at, is the fee representative of the service? That is what's regulated. So that's quite a big difference. So there's always been a debate between fees and commission, but you do find financial planners who's on a fee basis only. Excuse me. What does that mean? So being on a fee-based basis only means you only charge professional fees. You don't take commission off from products that you sell, because you don't sell products. You would maybe refer that to somebody else, which you can. So you would give your professional financial advice and you would charge for the plan. And you would then, if somebody, I'm going to keep on using commercial short-term insurance, your recommendation is that somebody maybe needs it. You would then refer that person to the advisor who may then charge commission for that. So that's the big difference. It always lies in the definition of something. And there was major confusion because there's a lot of thought process to say, yeah, but commission and fees are the exact same thing. It is not. Fees is what you charge for professional service, and commission is what you get paid for a product advice service. That's the difference.
And I think a lot of people would ask, but how do I know about all these fees and commission that's probably involved? But I assume there is some kind of like in disclosure that they have to agree kind of upfront, and you as a consumer, you obviously have to take that into account, and you will know exactly what are all the fees and the commissions that you will be paying, as well as the amounts or the percentages.
Absolutely. There's a principle that a financial advisor and financial planner and a broker at all times need to honor. And that principle is you need to place the consumer in a position to make an informed decision. So in order for me to place you in a position to make an informed decision, I need to disclose everything. So if I am going to sell you, let's say, for instance, a life cover policy, because I'm now busy with product advice, there's a quotation that will tell you exactly what the commissions are that's going to be paid, what the ongoing commissions may be. And if there's ongoing commissions, it means that there's an ongoing service from the product provider, but also from me if I'm a financial advisor. So I do annual reviews as well. That's from a commission point of view. You will always have to disclose it in monetary terms. So the commission is going to be 5 Rand or 100 Rand or 1,000 Rand. So you need to disclose it in monetary terms. The same goes for the fees. So commission again for products, sales, fees for professional advice. So I have to sit with you and say, Ronel, this is how much the financial plan costs. If you want me to do a full plan, this is what it costs. If you want me to only look at your investments, this is what it would cost. And then there needs to be a meeting of minds, consensus, and the client needs to agree to it in writing. The addition, I'm looking at it now actually, and I'm going to read just one sentence. It says, if the client agrees to the fees, the client needs to specifically agree to it in writing. So you have to present it to the client. The client needs to understand, and the client says to you, know what, I'm happy to pay that amount. That's fine. But remember, the moment that you've agreed to that fee, you've agreed to it. And if you then back out of it, it's like you stop paying your car. The bank can come and take your car back. If a financial planner is charging you fees and you've agreed to it, and he issues that invoice, and you default on that payment, he does have recourse to do debt recovery. That's very important because there's a contract that comes into existence.
Yeah, and
Yeah.
this is so critical for people to
Yes.
understand and to
Yes.
know, because that obviously has a direct impact on the performance of your investment or your policy or product. And then sometimes they criticize the performance, but without the fact that they actually should have ask or knew kind of like what the fees and all the costs involved
Exactly.
are.
Should have understood it. Yeah.
Yeah. So,
Yeah.
Lelane, for people who might be listening to this and who are actually considering to become certified financial planners, and I believe also during this time that we are going through with COVID and lockdown, lots of people
Yeah.
losing their jobs, lots of people's
Mhm.
businesses are closing down. There might be people who might be interested in following this as a career path. So maybe you can just explain to us what is the process to become a certified financial planner?
All right. So first and foremost, you need to love people. You need to love people. You need to have the agility and ability to listen to people, not want to run away. That's one of the softer skills that comes in. You need to be a bit of an analytical thinker, but also somebody who loves to solve problems. Because financial planning is exactly, it's a calling. I firmly believe that it's a calling because you help people and you help them resolve their problems by applying your knowledge and the competencies and the skills that you have. So let's say you are a matric pupil of the class of 2020. I have one son now, Bastian, who's just matriculated. We're still waiting for results. So
Oh.
you're a matriculant from the class of 2020, and you want to become a certified financial planner. It is a journey. Just like it is a journey to become a doctor, because becoming a financial planner, that belongs to the financial planning profession. And I say that specifically profession. Financial planning is a profession like accounting is, like somebody who's an attorney or a lawyer, somebody who's a doctor. Financial planning is a profession. So it's quite a robust study. So you need to obtain matric is, and I've explained it to my son the other day like this. So matric, which is grade 12, is on a national qualification framework level 4. So the moment that you have matric, you've got an NQF4. That's what we call it. Now, to become a certified financial planner, you need either a BCom honors in financial planning or a postgraduate diploma in financial planning, which sits on an NQF8. So you can work out for yourself if one NQF level is a year. How many years, is it going to take for you to become or just to obtain your qualification? So you need to get 5, which is your first year of a BCom. You need to get NQF6, which is your second year of a BCom, and your third year of a BCom is in the level 7. So a lot of times people go like, "Yo, you know what? My third year is so much difficult than my first year." Yes, it is, because it's on a higher cognitive NQF level. You need to be able to apply your knowledge more. So that's 3 years, and that's if you carry on and you just pass the first year, pass the second year, pass the third year, and you don't have a break, for instance, in between. So that's 3 years to get to a BCom level, because to get entry to a postgraduate diploma, you need at least a BCom or something that's equivalent to a BCom. And the universities has got very specific criteria for you to enter a postgraduate diploma. Then only you get to the level where you can do your postgraduate diploma in financial planning or your BCom honors. We also have a process which you may be aware of, where we are looking at somebody who is specializing in other fields like a chartered accountant. A chartered accountant's education level is also on an NQF8 level, because that's the level of the qualification that's underlying and underpinning the CA designation, for instance. The same with maybe a lawyer, somebody who had an LLB or has an LLB, that's also an NQF8 level. And the important thing of an NQF8 level, that is the cognitive level at which your mind operates. So we would then look at any other qualification but those two and see, Do we have some fields within that qualification that actually applies to financial planning? If the answer is yes, we tick that box. Then we say, okay, now we look at your experience. Do you have 5 years of relevant financial planning experience? Then we would also look at somebody who, in that instance, we call that the challenge status exam. So you need to obtain a BCom, postgrad, or any other relevant qualification. So once you're at that NQF8 level, which is 4 years later, and remember, whilst you are studying, you can work. And in today's world, there's a lot more students that studies online whilst they work, especially when you do your postgrad. Somebody doing a BCom may still do it from home or at university, but the moment they move into their postgrad or their BCom honors, they normally work, and they do it whilst they work. You need to obtain your relevant experience then as well. So you need the qualification. We call it in short the 4 E's. So the first E is education. The second E is then your experience. You need at least 3 years relevant financial planning experience. If you come through the challenge status exam route, in other words, you have another qualification, which is not the 2 that I've mentioned, you need to have 5 years of experience. Now, that's not unfair. That is a process of recognition of prior learning. So we look at your learnings through experience and we say, you know what, cognitively, you're on the same level than somebody, but let's test it. So then you have the third E is then your exam. So there's a board exam. Most professional bodies, if not all, have a board exam that you have to come and write, where they then test your ability, and they don't just look at your academic ability, they look at your experience as well. And that board exam, that's why it's called a capstone exam. So we give you a real life financial problem to say, here's Ronel, this is how she's married, she's got so many children, they don't have a medical aid, there's no valid will in place, this is the portfolio, this is the risk profile. We give you the whole profile of the client and we say, provide a financial plan to Ronel on how you're going to solve the problems. And in that exam, there's 3 very important things that we test. We test your ability to collect information, which is qualitative and quantitative. We test your ability to analyze. There's a lot of financial calculations that you do. You can either use the financial calculator that I have in my hand. It's always lying right next to me. I'm just amazed at how long these batteries last. I've had it in since 2010 and it didn't die. And I do use it a lot. So I think that's a can't do it battery. But in any event, so analyze, do the calculations, but then you have we also test your ability to make a recommendation that makes sense. And then we test the golden thread, which is the practice standards, where you establish the relationship, you analyze the information. You're familiar with the 6 steps of financial planning. That's the framework. You analyze the information, you recommend, you draw up a plan, you develop the plan, you implement the plan, and then you review it. And we test all of that in the exam. Then the 4th E is that ethics that I spoke about earlier on. Every year there's a declaration where we also do a bit of a background check to say, is this somebody who can be a member of the FPI? Or are you maybe sequestrated, liquidated, or there is a massive investigation pending against you, or whatever the case may be? Then we would say, you know what, at this point in time, until you're rehabilitated and there's proof of it, you can't be a member because, and this is an example, if you can't work with your own money, you can't work with a client's money. So we would look at the ethics point of view. And then the moment that you've passed all 4 those E's and you become a certified financial planner professional of the FPI, or an FSA or RFP professional, which is sitting on our advice side, a 5th E comes in, and that's enforcement. So if a member from the public would write to FPI to say, you know what, Lelane is a financial services advisor at the FPI, FSA, she recommended the wrong product, and this is how I was prejudiced, please investigate this. That's the enforcement. We've got a very strong, robust disciplinary process in place, but every single professional member of the FPI also subscribes to the FPI code of ethics, which is different to as a code of conduct, which is what the regulator has. We have a code of ethics where you have to adhere to 8 principles, but also stay in line with the practice standards of financial planning. And that's in a nutshell how you become a certified financial planner. It takes time. It doesn't happen overnight, which is why our certified financial planners are highly competent.
No,
So
absolutely.
is our advisors.
No, absolutely. I mean, if you have to go through all of this, you definitely know what you are talking about.
Yeah, and you can do it at any age.
Mm.
I started to become a certified financial planner when I was already a working mom. So you can really, I mean, I started in a completely different direction. And then, like I said, when I worked at the financial services provider, I was there for about 10 years, to 11 years. I literally fell in love with what is known as an advisor and a financial planner, and I wanted to be one as well. But you cannot just become one and say, okay, now I want to be this. No, no, no. You have to study. You need to, you go through massive examinations and lose a bit of hair, but it's fine. You know, you just, it's hard work. That's why I'm saying that all our professional members, RFP, FSA, and CFP professionals, are highly competent professional members of the FPI.
Okay, thanks for sharing all of that. Then just
Yeah,
if
it's a lot.
I talk to a financial planner, I obviously want to know that they are aware of all the latest changes in regulations, products, tax, legislation, all of that. And I mean, those things are changing like in, you
Yeah,
can say like almost every week or every
yeah,
month.
it does.
So how would, or what are the requirements for a financial planner to keep up to date with all of those changes?
All right. So and I'm a firm believer that at this point in time, we say that our members, the CFP professionals, must obtain 35 CPD hours every year. So what does that mean? It means 35 hours of continuous professional development. So I need to, a minimum, that's not the maximum, that's the difference. I need to obtain a minimum of 35 hours that I sit every year that I use to actually update my knowledge. So I need to complete short courses, and I need to be able to provide proof that I've, like a result of the assessment that I did, or a summary of the article that I read. 20 of that must be verifiable, and 15 of it is non-verifiable. So 35 hours, that's the bottom line. But again, I want to emphasize that's the minimum. Now, if you want to be a true top certified financial planner, let me tell you, 35 hours is not nearly enough to stay up to date with what's going on a daily basis. From my side, and I'm not even a practicing certified financial planner, I spend at least an hour a day reading what is new, reading the market, seeing what's going on. Oh, there's another law that actually updated, and make sure they need to make sure, certified financial planner or an FSA or RFP, that you are linked to the right newsletters. I'm linked to Juta newsletters, for instance, that informs you when there's an update to certain regulations. Obviously, I'm not going to spend too much time on a regulation that's got nothing to do with my sector. I go like, oh, okay, that changed. It's nice. That's how you should plant mealies now. You know, that's cool. But I would hone in and focus on the laws that's relevant to my profession. And you have to every day be relevant with what's going on around you if you really want to give top-notch financial planning to your clients. You cannot not know what's going on. I mean, if you spend at least an hour a day, I mean, you can go work out for yourself. And there's a lot of planners over weekend. I mean, I use weekends as well. FPI has over 50 free webinars for our professional members who are members of the FPI. So it's there. They just go in and listen to the webinars, and they complete an assessment after that. And then they also, like I've said, they need to complete their ethics declaration every year. And if you're a financial advisor as well, that's licensed at the Financial Services Sector Conduct Authority, you must complete 20 CPD hours for the FSA as well. So if you're an advisor and a planner, the 35, the 20 can form part of the 35 that you've done. But that's critical. So you can, as a consumer, ask your planner or your advisor, are you up to date with your CPD? And they would look at you and go like, how do you know that? I know people. I know people. So make sure that your planner or advisor is up to date with their continuous professional development. You cannot not be if you're in this profession. You have to be.
No, I totally agree with
Have
that.
to. Yeah.
Lelane, the last question I have for you. I'm obviously very passionate about financial education, and I do believe that in many instances, a lack of financial education is almost like in the root cause of a lot of things kind of like in going wrong. And quite often, the consumers don't have the confidence to really ask the questions, or they don't know what questions they should ask. So maybe you should just briefly touch on your thoughts in terms of financial education.
That is also a big passion of the Financial Planning Institute. So we've got a dual mandate at the FPI, being a professional body. So our dual mandate is that we make sure that we've got learning pathways and continuous professional development for our professional members, and that we make sure that we advance the preeminence and status of our professional members, whilst at all times, this is the other side, take into consideration the importance of the community they serve, in other words, the consumer. That is why consumer education is so important for the FPI as well. So I've mentioned previously that we sit at National Treasury and the Financial Services Conduct Authority on development of regulations that regulates the advisor and planner a bit better. But we also sit on committees at National Treasury that focuses on consumer education programs. So what is it that the consumer in South Africa needs to have basic knowledge of? So that is where we help National Treasury to develop programs like that. But we also sit on committees at the Financial Sector Conduct Authority, who's got quite a robust program on consumer education and the basics that you need to know without relying on an advisor or a planner, for instance. So FPI has also developed our own programs. So things that you should be aware of, and I completely understand that not everybody's financially minded. I mean, it's not your strength. That's why you rely on an advisor and a planner. But certain things that you need to ask and need to understand. You need to have a basic understanding of your own household budget. And I'm looking at our own website at the moment. So what we have is if you log on to www.letsplan.co.za, that is specifically for the consumer and where all our consumer education tools lie. So you can click there. The first thing that would pop up saying, are you looking for an advisor? And then you can put in, let's say I am from Nigel. That's where I grew up. So I would put in Nigel, and all the professional members, whether you're an RFP, FSA, or CFP professional, would then come up. And you go like, oh my goodness, here's the address. I didn't know there was a planner living right next door to me. So that framework is available to you. But play around in the system. It's actually quite nice. You could see budgeting tools. How do I put a budget together? Life happens. I want to buy a car. What are the things that I need to look at? Or I want to buy a house. What should I do? Or I'm getting married. What should I look at? Oh, I'm getting divorced. So what is it that you should look? Or I need or all those fields that we spoke about. The very basics is there for you to read maybe before you meet your planner, to say that, all right, the basic says this is what I need. So before I speak to my financial planner, I have read on www.letsplan.co.za, this is what I need to look at when I'm doing a budget. So there is some form of self-education that you can do. And the beauty of today is we're not in 1975. When I was born, where there was no YouTube, there was no cell phones, there was nothing. There was a TV if you were lucky. We're not in those ages anymore, where you now, at the click of a button as a consumer, there's a lot of consumer education programs out there. So have a look at our website. You can then obtain a certified financial planner there, but also have a look at what we have. And I know you'll enjoy this, Ronel, is we have a program, My Money 123. That is a full program on how to manage your own finances. And let's say you are an employee working at a much big organization, and you've seen this program and you just want everybody working with you to know about it. Contact the FPI, speak to Rihanna, and Rihanna, I'm sorry, but I'm going to give out your email address. It's rihanna@fpi.co.za. And what she can do is she can assist to get or to ask one of our certified financial planners to actually come and do the full My Money 123 course with you and everybody that's in the office with you. Now with COVID, that's not a stumbling block. We have developed our My Money 123 program into 3 little recordings. So you've got My Money 123 that's on YouTube and it's on our social media platforms. You have the second one and the third one. And the latest one that we've launched, which is also on our social media platforms and on YouTube, is Wills and Testaments. Especially now, it's important. What is the basic of a will? What can I do to make sure that I have it in place? So those are all the self-education video clips and recordings that's available, that FPI is making available to the whole nation for free. If you've got a laptop and you're fortunate to have data, log on to our website, go to our YouTube channels, look at our social media platforms. All of those courses is digitalized now. But if you do want special, if you want one person to do, let's say, an MS Team meeting with you and everybody in your office, we do have certified financial planners who's actually trained in the My Money 123 program, who can then do one-on-one training with you and your whole team. Let's say it's just a family that consists of 30 aunties and uncles and ooms and tannies and opas and omas. I mean, these days, the other day, my family had a WhatsApp FaceTime call. So with everybody's faces and everybody was talking at the same time, like I am now. That was a bit crazy, but yeah. So we've got a lot of resources that's on www.letsplan.co.za.
Okay, that is absolutely awesome to know. Lelane,
Yeah.
I want to thank you for spending some time with us today. Thank you for sharing your knowledge and wisdom. And I think thank you for just making or clarify what financial planning is all about and how people can go about to make sure that they do get the full benefit out of the financial planning process or the industry. So thanks a lot for sharing all of
No, it's
that
only a pleasure.
with us today. And I'm going to share the details where you can go to the websites for the education, where you can go and look for certified financial planners. So I want to thank all of you for watching. I hope you've enjoyed it. Please, in the comments below, give us some comments, ask some questions. We will definitely get back to you if you have any questions. Remember to enter for the giveaway competition. And then I want to wish you well, and I will see you at the next Ronel Talks Money Show.